Good afternoon, Campbell McCrary here, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Rex Minerals. Rex trades on the ASX as RXM, Rio X-Ray Mike. Do hope you'll enjoy today's program. It will also be available in replay mode. Feel free to chat in your questions in the question pane of GoToWebinar or simply email them in and we'll ask the questions in real time. Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource sector. This call will be available about an hour after we close up. Just check out amvestcapital.com/webinars and you'll get the replay there. Feel free to share it and post it. All important disclaimer, this call is most definitely for informational purposes only. We're pleased to have with us today Richard Laufmann, who is the CEO and Managing Director of Rex, making you presenter if you want to share your screen, Richard. He's a mining engineer with a broad experience in the resources sector, both corporate and operational. Previous firms he's had very important roles at over a long period of time: Indophil Resources NL and Ballarat Goldfields NL and WMC Resources. Again, following the presentation, we'll be asking questions of Richard, and we would love to entertain any questions that are sent in from the larger listening audience, and we'll build it into the Q&A almost immediately and verbatim. So pay attention and send us some questions there. How you doing, Richard? Good morning.
Good morning. How are you? Thanks for having me.
Thanks for showing up. And you've got 15-20 minutes, whatever it takes, and then I'll come back.
Thanks very much, Campbell.
Yes, sir. You're on.
Oh, sorry. I was just, I'm looking at myself, that's all. There we go.
No,
Look,
you've turned off your videos. Turn that back on.
Sorry. You got me now?
Yep, all good. Move the slides.
Okay, thanks very much, everyone. I just want to quickly explain to you the Rex story. I think we've obviously got a copper project in South Australia, and we've got a gold project which is fast emerging in Nevada. Both are really exciting, and I think it's a very, very straightforward story in the sense that, back pre-COVID, copper was in the $2 doldrums. We've ended in a gold project. It was just exploration license at the time. And we've quickly grown that. And of course, coming through COVID, many things have changed for us. They changed rapidly. So we achieved permitting approval for our project in South Australia. We had the legislation changed in South Australia at the beginning of this year. So all the stoppers and blockers have come off. And of course, we've had incredible success in our Hog Ranch project in Nevada. So we most definitely are a 2-for-1 company at the moment. Whichever one you take, you get the other one for free. And look, two company making assets is how I describe it. 2.2 million ounces we've already got in resource, and we just released that resource upgrade in Nevada, and 2 million tonne of copper in resource that we discovered in South Australia, as well as some of the most exciting exploration tenement in that part of the world. I'm not going to bang on about this topic, but when I was trying to get people interested in South Australia, copper was in the $2 doldrums, and of course we're already at the EV version of the price of $4. If anyone hasn't read Bill Gates' book, you should, because once he pivots the Gates Foundation into a topic, you know that things get serious, and that's where we think things are going now. Anyway, Hillside was a discovery made in 2008. It was a very exciting discovery. It's part of the Gawler Craton in South Australia. And it very quickly turned into a very significant project. We've now got 800 drill holes in it. We've completed a full feasibility. It consists of 6 main mineralized structures running north-south, and they range to an average thickness of 27 meters. And as they go deeper, they're coming together, getting wider, and the grade is going up. Mineralization starts from near surface. We expect the first 30 to 100 meters to be free dig. This project is open along strike and depth. I'm not going to dwell on this slide except to say what you're seeing here is a Hillside granite, a prime point fault system, and a heat source, the Gabbro. We don't know what lies beneath us, but I'll talk to that in a moment. This is the setting that you would expect to see in a major IOCG in South Australia. By the way, this hosts Olympic Dam, it hosts Carrapateena, it hosts Prominent Hill, and now it hosts the Hillside Project at Rex. I'll just give you a quick snapshot of the long section, and the only purpose for putting this up is to describe what open means in the context of Rex and the Hillside Project. Look at these intersections down between 600 and 700 meters. We've got 26 meters at 1%, 15 meters at 2.86, 93 at 0.6, 28 at 1.72, 22 at 1.1. The other thing that's happening at depth is we're seeing the gold grades starting to climb. We're getting up to 0.5 gram gold. We've only got 0.16 near surface, and the iron ore grades are climbing dramatically as well. Near surface, we have about 8% iron ore in the project. So this started life as a much larger concept, and it was going to be, and it was permitted on being, a large copper iron ore gold play. Anyway, I just want to leave that with you because these are the holes at depth and only at 700 meters. If you have a look in a long section at our planned pit, the study that I talked to you about is this green outline here. That's stage 1. Stage 2 is a more significant cutback of stage 1, which would double the life. That's not currently in the feasibility study, but we're updating that at the moment to include it. And stage 3 can be a number of things, including a underground, which is currently designed as a sub-level cave. We have all the iron ore from the project going to the tailings dam available for later in the life to be processed, and that makes money, and that's very profitable, about $90 iron ore. And this large area here, this could become one of Australia's largest batteries in the future as a pumped hydro because of our proximity to the ocean. So anyway you look at it, this is a very exciting project. To give you some perspective on the project, we have a low capital intensity. That's as a consequence of where we sit, and I'll show you very briefly where we sit. And we have a C1 cost of about $1.38. So I stole the inspiration for this video graphic here, but when you have a look at it, it tells a very clear story. If you want something of substance, anywhere where you can rely on it being built that's actually permitted, well, I can't find another one at the moment. The mining, straightforward. We get up to 16 trucks maximum in the pit. It's 5 stages. We have a 3.8 to 1, 6.8 to 1 strip ratio, and a pre-strip of 54 million tonne, all priced in to the project. We're sinking at a vertical rate of 34 meters per annum, so not pushing it by any measure, but designed in 10-meter benches, to take us out and to give us access to the ore body in a way that is more reminiscent of what they're doing at the Super Pit in Western Australia. So we've got the capacity to move bulk volume when we need to, and we want to move get the waste moved, but we can also follow the ore body where it narrows and chase the grade. The process flow sheet is very straightforward. It's not too difficult. We're going to use predominantly seawater, and we only use a bit of potable water at the end just to wash the concentrate. The tailings obviously on site. It's a low rainfall area. It's pretty straightforward. Importantly, unlike the other South Australian copper projects which struggle and have very high uranium content, we don't. And we've got about a 39 ppm uranium in concentrate average during the life, very low arsenic and any other deleterious elements. Here's the real kicker. In today's world, You know, when we're all trying to talk about what we're doing in regards to ESG, and particularly on the E, is reuse infrastructure rather than have to build train sets to nowhere. We have a highway running from Adelaide, and we have to conduct a small diversion before we start. We have the South Australian power grid, which is already roughly 60% renewable that we tap into. And we have a potable water line, which we've already completed to here, that has to be extended to the site, and that's only for washing the concentrate at the end. So our advantage is township of Ardrossan is adjacent to us. We have Port Adelaide, we have highways, we have housing, we have all the infrastructure required to build it. If this was Rio's Winu project in WA, you're looking at $1.5 billion up front just on that infrastructure. So we save that. Yeah, there's some of the advantages. If we were to go through and mine stage 1 end of life, we'd return over 60% to broadacre cropping. It's the farmland it came from. And we'd conduct one of the biggest ever reforestation projects in the Yorke Peninsula. So any way you look at the project, during its life or its end of life, it's an exciting proposition for the state and for the community in which we operate. So we expect to have about 430 people over 13 years, and you know, as I said, it contributes a lot to the Yorke Peninsula and the people of South Australia. So in any way, shape or form, you'd have to rate this as one of the nation-building projects to produce copper, pivoting into the new world. These are some of our metrics. First 13 years, we've produced 35,000 tonne per annum of copper, 24,000 ounces of gold at 0.66%. The view on this project is very straightforward. We're financing at the moment. What's the copper price? We use $3 in our calculations. Obviously, it's $4 now, and you can see what happens with the copper price to the value of the project. And you know, we're in the bottom half of the cost curve as a producer, but we have that big stage 2 coming. This is just some of the project sensitivities. I won't dwell on this. Obviously, I used the Musk case at $4 as our upside. I think now people are starting to pivot towards an upside in the next 5 years, closer to 7. So it's a good time to get set in copper. Regional exploration, 3 quick notes on this. Have a look at this. Look at our land area on the Yorke Peninsula in South Australia. Right? We went there and pegged all this. We have some outstanding targets. And whilst we were waiting for the legislation changes in South Australia and the approvals, the final approvals for this project, we downed tools on exploration, also partly to do with the $2 copper price and the fact that we didn't have a lot of money. But we have a plethora of fantastic targets that we'd like to go at. And I mean fantastic. We've already got a hole into one of them, 34 metres at 0.6%. So this is part of the Gawler Craton. This is a South Australia's endowment. And this was called, you know, the Copper Coast in its day. So this is a part of the world you want to be at. I'll give you one flavour, some look. Here's another project we called Westbrook. Basically, purple and red is good. You can see the hillside analogue next to it. The only reason we don't have data here is there was a fence and someone had a farm with wheat on it at the time that we wanted to geosample it. This is a super exciting prospect to go for. So it's a fantastic exploration portfolio moving forward. Very quickly, I just want to pivot to this little baby, Hog Ranch in Nevada. So I said when we bought it, it had no ounces. I used to be running the gold business at Western Mining, and when Western Mining owned this, WMC Resources, they paid $100 million for it, had it for 4 years, 1 million tonne per annum project, but I knew the operators. And in fact, I got them to Australia to help me build the heap leach at St Ives in Western Australia. Well, here's what's happened. In short order, we're very quickly growing the resource. Our resource upgrade a day and a half ago took us to 2.26 million ounces, which is a significant increase from 1.4. We've achieved this conversion at about 69 cents US an ounce. We tripled the indicated resource to 560. And the high-grade core that we're talking about, which is where we start our pits, has jumped to about 54 million tonne at 0.65 for 1.13 million ounces. So that's a 50% increase in grade through the last drilling season. And we're talking about tops 25 holes. To be fair, this wasn't a greenfields discovery. Western Mining had bought it, remember, in 88 and mined it to 92. And we got hold of their drilling database for the day, but in those days it was $300 copper, right? You just couldn't, you couldn't get excited about this prospect. But gee whiz, it spans an area. Western Mining played in the middle of this pit here called Christa and played down here at Bells. They made initial discovery into this area up here called Airport, but they walked from it because that wasn't their mandate at the time. Since we've taken over these small licenses, we've quadrupled the license area, conducted the first ever magnetic survey, the first hyperspectral surveys. We've now conducted 3D IP, and this thing is starting to blossom as potentially one of Nevada's biggest trends, and it certainly is by footprint. Have a look at this. 7 million ounces at the time of this footprint was the Round Mountain analogy, and everyone knows about Round Mountain. And check that out up against Christa, which has already got to 1.6 million ounces. Right, this is an exciting prospect. We've been up here to Gillum, very exciting. I'll just quickly run you through what it looks like on an economic basis, because when we acquired it, and when we first started upgrading the resource, we were focused on this little pit area here, and that's what it looks like. It was left behind by Westerns. They never really mined it. They took some tons out and walked away. And this is a photograph of the day, but we did a scoping study which we published, and that scoping study has us at producing about 40,000 ounces per year at an all-in sustaining cost of $900 an ounce. Pre-production capital 58 million. The reason this project sings so sweetly is we have an 80% recovery in around 22 days. And we have a strip ratio of less than 0.5 to 1. Well, this thing's already grown dramatically since we completed the scoping study. And I won't dwell on this slide. That's just a cross section through it, and you can see where it sits in relation to surface topography. But what's really exciting, what's breathtaking really, is when we conducted the mags and the hyperspectral, and this is just a look at the mags. The grey outline there is a resource outline, and we have a red line, a bit harder to see, which maps the greater than 1 gram contours of the pits based on drilling. You can see the colors here. That's all the hyperspectral survey lighting up, right? They're the gold bearing and indicator clays. Well, there's not a hole in this. The closest hole to it tags the end of it. That's 32 meters at 0.63. We're looking at a triple the area of hyperspectral signature to the south and west of this pit compared to what we're seeing in the pit, and the pit's already 500,000 ounces. So we can see this pit, well, at the very least, I expect doubling in size, and that's just the starter pack for this project, all oxide plus 80% recovery. You know, you guys over there know a lot more about heap leach than the Australians. This slide's really in here for Australians because they don't understand heaping. We don't do it in Australia a lot. I did it at Western Mining, but it's quite unusual. So I won't talk through that, but that's in our pack, and it gives you an indication up against a range of projects. So I said, if you look at this, 0.5 to 1 strip ratio, if you compare that to Relief Canyon, say at 3.8, Gold Strike 1.2, or Marigold at 3.2. So these projects are all a function of what you do. Where are we at the moment with this? Well, it's we're drilling again in about 2 or 3 weeks. We've just upgraded the mineral resource. We're just processing the 3D IP survey data. We're conducting, and have been for a while, our initial baseline environmental permitting for the Bells project. And we're contemplating whether or not we permit the starter pack, the Bells mine, as under an EA or an EIS. And I think the scale of the project as it's changing now is driving our thinking there. We expect drilling results to start coming in the second quarter, but probably our flagship without doubt is Hillside in South Australia. We're looking at the finance and putting together partners for that at the moment. I can't talk a lot about the progress of that, but that's exactly where we're at. And obviously at $4 copper, that's a great place to be. And we're also reviewing the reserves of Hillside with a view to whether or not we can double them in short order, in short time, just so people could be reminded and see the true value of this project. Anyway, here we are, we're back on site. It's an exciting time. I think Rex is a super exciting story. And thank you very much for logging on and having a listen.
Great, thank you. If you want to put your presentation back up, Richard, and we'll maybe refer to it. Excellent. Any thoughts on a US or Canada listing?
Look, it has to be on the table because, as I said, it was $2 copper when we acquired it. Look, I've certainly had a few exploratory discussions with a few players. I think COVID's changed our capacity to act quickly on that. So now that the wheels are starting to turn again, I think we can focus on what we do with this project going forward. At the moment, we're pretty well placed to conduct the next round of drilling, and we have some exciting plans for it. Just time in this project hasn't really let me go into a deep dive on the Nevada project. But
how is it managing Nevada from Australia?
Look, it's tough, but we're very lucky because we have some fantastic geologists who came on with us early. A guy called Randy Vance out at Newmont and Hecla. We have looking after our project in Nevada as a director of Hog Ranch USA, Shree Leeden, who also is the CEO now of Gold Bull. She's fantastic value. Happens to be Australian, so we speak the same language, but she lives over there in Nevada, and she works 24/7. So Gold Bull's headwinds are the same as ours, discovery permitting in Nevada. So, that's pretty good marriage there. And so we've got a good team. We've got a good drilling company that we struck a relationship. So at the moment, the big difficulty is, I started to meet BLM officers and meet all the people from those areas. And now we're stuck on Zoom conversations, and that's an imperfect world. And I'm looking forward to getting back over there.
Could you estimate how much you paid for and spent to update your new Hog Ranch resource per ounce? With that all in cost, well, all in,
so
per ounce.
We paid 600,000 Aussie dollars in shares to acquire the Hog Ranch project. Right, so at the time the share price was about 600,000 Australian dollars, and to date we've put 2.2 million ounces on the books at around 69 cents US an ounce.
All right. What is your deepest high-grade intercept at the boiling zone targets at Hog Ranch? What is your drill intensity below 100-meter elevation?
Look, basically we have NAFL drilling below 100, maybe, I'd be lying if I said accurately, but let's say we've got 10 holes below 100 meters, 150 meters, not a lot of drilling below 100. We have some outstanding intersections. We've got an intersection like 6 at 60 from about 60 meters. So we have a couple of targets which are outstanding, and over at Airport, we also have some really good grades and targets. But our objective here has been to try, because there's a lot of gold. There's a lot more than the 2 million ounces that we've already put in the resource, right? That's just a fact, right? There's a lot more gold, and we've got that drill hole database and we can see it everywhere. But, we don't necessarily want just truckloads, 0.3 gram gold. So we have a view that the gold is definitely being carried on structures. We have a view of the genesis of the gold, and we pursued that with our first round of drilling and putting in place the geophysics. And it looks like this is paying dividend. I could not believe, I come from Western Australia, when our geologists wanted to do an IP survey over it, I'm thinking, yeah, geologists, they love their stuff, right? I'm a mining engineer. But when the IP results came back and pinpointed drill intersections exactly where they were, I got a bit of a shock. In fact, I had to bring in other geologists whom I respect much more than my own capacity. And I'm going, what's going on? And they said, we've never seen IP perform like this. This is, I think, the difference between the part of the world where we're in over there in Nevada and Australia. IP doesn't give you that level of response. You've got too many artifacts in it in Australia. So we're now conducted an IP, 3D IP survey, which to help us target the collars. What am I aiming at here? We've already created a massive improvement in the grade. So if we look at the high grade core here, it's 0.65. So we're trying at the same time to outline the footprint so we can get our head around infrastructure, mine size, scale, but also put some drill holes in to follow our thesis on the structures. And remember, some very good geologists before us had been here. Steve Bussey in the WMC days comes back to help us to understand what they understood in the day and translate that to today, 20, 30 years later. So what we're trying to do is identify the high grade areas to drive this. And we've been very successful here, but it's also quite enticing to step off and demonstrate that this could be 5 times larger. Right? This is not just a 2 million ounce show. This is what we added very quickly with an old drill hole database and a bunch of holes. Right? You can see the gold signature footprint here, and the hydrothermal is so strong. It's quite amazing. And I can't give sensible commentary, but I can tell you, I've had some top level geologists through who have spent their careers in Nevada, and they've looked and said, Jesus, no one knew this was here, right? Half of it's undercover. This could be the biggest footprint that we've seen in Nevada. And you can see it already when you line Round Mountain up with Krista. And on a footprint basis, this is enormous. So it's a really exciting prospect. And, you know, I'm being honest. I mean, obviously it's a little bit too much to chew for a company Rex's size.
One more question and I'll pass it to my colleague. Can you dive in a little bit more on the grade of the overall resource? Were you able to find more grade, if you can say that, or increase it? And just comments on your package and the grade you're finding.
So our last resource was 1.4 million ounces at a grade of about 0.42, right? 1.4 million ounces. We've got a high grade portion of the resource now that's about 1.2 million ounces at a grade of 0.65 grams per ton, right? So the grade on minimal drilling has significantly enhanced on that section. At the same time, we've added a lot of additional lower grade tons. So we're trying to do 2 things at once. We're trying to expose the footprint of the project for planning purposes, and we're trying to improve our knowledge of these structural controls so that we can raise the grade of the starter pit. I mean, let's face it, we put together a study design based on 3 million tonne per annum, mobile plant, off-the-shelf pricing. Caps Cassidy did all the design work for us. They did the original design work, right? They did this design work for us. These guys know what they're doing. And we just looked at 3 million tonne per annum, drive up, park the unit, power on site, away you go, right? So everything was expensive, day shift only, truck running 800 meters downhill to a heat pad. Now we can already see that we probably didn't seize the day and take advantage of the amount of gold here. If we translate that to a larger scale project, bring in the power, we can already reduce the costs. We think the economic cutoff for us is already down around 0.12 grams, right? Well, we can obviously drop that below a gram. And we've got a large scale project approaching, 0.4 plus 0.4 now, but a high grade core at 0.65. But we haven't really got started on the high grade yet. This is a function of our scale. So that's still to come.
Thank you.
Yeah, thanks for the presentation, Richard. Perhaps if you could touch on, the history of, having Hillside, and then, the permitting process is a bit prolonged, and that's why you picked up Hog Ranch. Some of the, people listening will think that, strange combination, Aussie Copper Project with the Nevada Gold Project.
Okay, so you're talking to a guy that came out of Western mining, so owning gold, nickel, copper in the same company, to me doesn't feel odd, right? But it's also a function of opportunity. So we had Hillside, we discovered it in 07. We got our mining license approved in about 2014, so that's half the journey. And gold and copper and iron ore prices were up, but we had a very big $1.4 billion project design that was largely iron ore focused. Iron ore started to come off with the GFC. So we looked at redesigning this into a copper only project. Of course, the iron ore and then copper price fell and they started falling. And below $3, I couldn't, I raised money in September last year and no one wanted to talk to me about the Hillside project, right? They said, no, don't worry about that. I said, come on, you got to listen to one slide. This is the future. No, don't worry about it. But at the same time, I owned privately through a different vehicle with a group of friends, this exploration license called Hog. It was in joint venture. It used to belong to Western Mining. I came from Western Mining, right? So we owned this privately, and when the joint venture fell over, with my Rex helmet on, we had a look at whether or not this could be an avenue for Rex to go in and generate quick cash flow. Because I thought, hey, it was $300 an ounce in the day. We might just stick go in very quickly and get a couple of 100,000 ounces of cash flow to stay alive, to keep on kicking in Australia. So of course, Hog turned out to be vastly different. But at the same time, during COVID, we got our big breakthrough. We finally got the second phase of our approval. So we had our mining license. This is the environmental and operating permit. So we got all of our approvals in South Australia. That took a long time, but now we have them. And then at the beginning of this year, the legislation that needed to change in South Australia changed, right? And bipartisan support, both parties pushed it through. These were the things required to unlock the development. So now she's shovel-ready development, just seeking finance. Excuse me. And look, I'm a copper boy through and through. If Elon Musk was online, he'd be saying, how fast can you build that mine and get the copper out so we can turn that into a big battery, right? And that hole at the end of life could be the biggest battery in Australia, right? It could become part of the national energy solution, but that could be 30 years away. But that's the time frame that you need to be talking when you talk national projects, because stage one's 13 years, and we think there's at least a stage 2 cutback. But we could be sitting on something as big as Carapatina underneath us when you see those drill holes in South Australia. Oz Minerals is worth $6 billion, and it's producing concentrate with plus 200 ppm uranium. This is a relatively uranium clean concentrate, and we have this ore body opening up underneath us. So, we're toying around with whether or not we put a few more deeper holes into it now as we speak.
Yeah, and then I guess we'll stick with Hillside. You discussed the Capex savings, so perhaps you could mention or summarize what they are again and compare them. A lot of people up here will be seeing these, big copper projects in British Columbia or, South America, issues, Canada has hydropower in some areas, and the lack of roads, and then in Chile it's always an issue with water as well. So if you could touch on the savings you have
Sure.
there.
So look, I think the first thing is I'll just give you a visual. The land's fairly flat, right? It has a fairly consistent 30 inches a year rainfall, right? So it's broadacre farming. So we're not clearing any native forest, right? We're not moving townships out the way. The ocean's adjacent to us, and we're using predominantly salt water from boreholes, and we're only using potable water. We've got power to our doorstep. Okay, well, that's not true. We've got a 132 kV line. We have to extend 12 Ks. We're attached to the South Australian grid, which is already 60% renewable. So as far as being carbon friendly, this project doesn't require all that infrastructure commitment, and we've got townships adjacent to us, right? Close. The Yorke Peninsula is a great place to live because you can go boating on the weekend, both sides, right? There's towns scattered up and down it, and they're really beautiful little towns. It's a really great place. So it's, I mean, it's just a great place to be, and as a project too. When I show you, look, if we just talk about one thing, where is it? Yeah, here. I'll just look at this. So there's, I mean, we're a kilometre from the ocean to the pit, roughly. Okay, so, and that's all granite, Hildeberg granite here, and the highway diversion goes around it, and that highway already runs. But if you have a look at this location, how many copper mines in the world has anyone ever heard that don't have acid mine drainage problems? I mean, that's a big deal if you're at a copper or a sulfide project. We have very little acid producing mineral left, right? What goes into the tailings and the waste dump. However, we have about 8-to-1 acid neutralizing rock coming out of the ground. So even if we had a truckload of acid producing rock, we have an excessive amount of acid neutralizing material to prevent it going anywhere. No water flows off the site. And if there were to be some sort of flood and storm, right, it all diverts into the pit. So as a mine site goes, it's a beautifully self-contained unit, right, that doesn't pose any threat to the environment around it. Doesn't clear any valuable land. I mean, sure, there's farms on it, but 65% returns to broadacre farming afterwards, right? So, so it's a pretty good project.
Yeah, interesting. I didn't understand that about the geology and how it impacts the acid usage. On the, once you've reached, your final investment decision, or you assume you have the money tomorrow, how long is like the build and until first production?
Okay, so we have about 12 months of work in this road diversion, the power line connect up, the water, getting the site generally ready, people housed, right? And then we're going to move into a lot of townships over there. And look, there's a lot of capacity for that, by the way, too. And then we've got a 2-year construction and development timeframe horizon. So the process plant construction, and if when you look at that, perhaps not my best image for that. If you look at this image here, you can see the size of the process plant here. But just to give you a sense of scale, this is the ROM pad. I mean, this can hold almost 8 months of material. So we originally designed this mine to operate at more than twice the current mining rate. And the process plant is designed to be doubled if we want to, right? So it's actually built into the design to double that. And the mining license extends way over here. So we'd be ready to go in around 12 months if we hit the go button with full construction, and pouring copper in about 3 years.
Yeah, okay. And one last question before I pass to Gabe. So for kind of stage 2, where would you see, or in your mind, what's the potential to expand production beyond the 35,000 tonnes per annum copper?
Yeah, look, we really chose production rate based on capital constraint and the size of our company. So there's 2 or 3 variants, including some possibility of discovery adjacent to the mine site. But it's really the mining rate and whether or not you want to invest in upgrading the plant. So the production rate could be upped, and as I said, we designed it initially to do it. And frankly, if a major owned this, they'd probably move back towards a 12 million tonne per annum mining rate, just because they can. Or they might sit and stick a few more drill holes in underground and see if you've got a big block cave there ahead of you. So, and we're toying with those ideas at the moment, but I think all versions of the future, stage 1 makes a good starter pit, because when you look at stage 1, and this is just, you know, miners look at this, at this depth here, 500 meters, right? That's about 500 meters of where Carrapateena starts. So we're mining our way, paying our way down to the start of the underground ore body, right? And that's you know, that's a pretty good way to go with the lower capital solution. And we've got quite a bit of time to work out stage 2, 3, and 4 of the project.
Gotcha. Thanks for that, Gabe.
Thanks. Richard, just as you're speaking to potential new shareholders, what would you say to them in terms of what's your corporate strategy? What's the next sort of 12 months look like? You have 2 assets in different stages of development, different parts of the world. And then can you just comment on your share price and your cap structure and your shareholders?
Sure. So look, what can I say? How do you want to value us? If you value us on the copper, I don't know, we're worth about 1 point something cents a pound in the ground. That's 0 for the gold. No, you can value us on the gold. So at the moment, most people don't know about Rex. Some have heard about it, but they remember the $1.4 billion project back in 2013. So people aren't really aware of this. Hog Ranch is coming on quickly, and I think the only reason we're getting a little bit of traction on people being aware of it is that Ely Gold have a royalty from Hog Ranch in their portfolio, and they've been talking about it because they're actually over there. So other than that, people don't know about the hog. Right now, we have a plan of action. We're working on the financing for Hillside. And look, I've brought on some new board members to help me with that. So Ian Smith joined the board, and Ian Smith was the CEO at Newcrest Mining when Newcrest bought Lahir Gold, and he went on to run Orica, but he comes out of South Australia. He used to run the Olympic Dam project in the day. I have the guy who ran the Olympic Dam expansion, Wojtek Oscar, on board. And I have Ron Douglas, who joined us at, he still is with Ausenco, because these guys are building copper projects all over the world at the moment. So I brought together a team, right, to help us finance and construct South Australia. Nevada is a nice problem to have right now. We think we can make a big difference and move the dial again, just in the upcoming drilling program. And, you know, look, I'm quite excited about the opportunities there. If you'd asked me 6 months ago, vending it into a North American or listing it over there might have been the first pass. But now I see, you know, other possibilities, and we're certainly being approached in regard to the asset. So look, we'd be the most undervalued call on the planet. If you can find another story like this, shovel ready to go in 2 spots like this. That's why I call it a 2-for-1, right? It really is.
Would you ever do a spinout or a sorry to interrupt, but inspired, dividend out one of the companies, one of the assets?
Yeah, we've done it before. So we had a project that gave birth to Rex Minerals, gave birth to White Rock Mining. So we spun that out, and we distributed it in species to shareholders. So I'm no stranger to having a crack corporately at this. Right? Definitely something that's on the table. It's just that it's grown so quickly. The story, what we're spinning out, has changed, right? I think when we bought it, it was moose pasture. Okay, gold started running hot, and we could have spun it out. But then we saw the possibilities for it, and it also provides us corporate opportunity with regard to Rex, as you can imagine. So Rex is going to start becoming, I think, a juicy fat target here now. So, Hog Ranch is, I think we're just enhancing the value of both of the assets. Mind you, I take your point, we haven't really enhanced the value of the company very much, but that's, we're still operators focused on the asset. I think the company valuation will follow.
For sure. And in terms of following the valuation, following the stock, what can we expect as shareholders over the next sort of 12 months time in terms of where you're spending your cash and
Sure.
developments generally?
So we've got a fair bit coming, and this might sound confusing, right? It shouldn't be. We've invested a lot in the story at Hog Ranch, and that's still unfolding. So we'll show people on the geophysics in the coming month why we've quadrupled the license area, and we've also got the drill rig going back there. So we'll be drilling at Hog Ranch, right? That's not too hard. Okay, so that's continuing on. That's exciting. In South Australia, we're currently looking at an update of the feasibility study for stage 2. If we complete that, we could have stage 2 feasibility out within 8 to 10 weeks, and that could see us almost double the reserve. At the same time, we're working on the financing, and that, look, the financing goes left and right. Obviously, I'm talking to equipment suppliers, vendor financing. I'm starting to engage the banks, but we're also starting to talk to potential joint venture partners. So it wasn't that long ago that you could have bought Rex for $10 million, right? So if we had jumped into this game too fast, I think back then anyone could have bought it for the decimal point on their balance sheet. While it's still a cheap acquisition, I grant you that. But I think this is changing, and I think the pivot in the copper price coming earlier rather than later is helping us. So I think the development and financing plan, and if we announce that in South Australia, that will change things rapidly, and that'll provide us with the stake in the sand to go forward. Personally, I don't find having gold and copper confusing. So long as we've got a good team taking the gold forward, we just have to decide the right time and how to deal with the gold project.
Sure. Yeah, it sounds very exciting. Campbell?
Yeah. We'll just kind of close with the sage grouse. Can you comment on his habitat, and does it involve your asset, and are you gonna find a home for those little guys?
Sage grouse. Oh, look, they're really cool. I like little sage grouse. I'd not heard of them until I came to Nevada. So, so Nevada has sage grouse.
Koalas there, so.
Yeah. So we don't have any sage grouse running around on site. Okay, yep. So and any of us are yet to see one. So the sage grouse issue for us is not so much of active leks of sage grouse. It's a definition of what could become a habitat. Right, that's a little ethereal, but obviously we've been conducting lek surveys, and we've been conducting aerial surveys and cultural surveys around the area to understand our situation. I think there's a general perception, and things have changed a bit since the Biden administration have come in, right? So, it's a case of tread carefully, but we have a really cool rancher nearby who has offered us sage grouse credits. So that's obviously a feature of, the game that we have to play over there. but we're not exactly sure on what this means. Like, so for me, it's pretty straightforward. If there's no sage grouse, there's no sage grouse, but I understand the system and the scheme, right? And it's just, what is it going to cost us? How much will we have to pay to be operating in the area? But we're not actually killing any of the little fellas.
They're delicious, I've heard. No, I'm kidding. But
Yeah.
I
No,
want
look,
to thank you.
Yeah, I'm a bit surprised by that. They do go hunting them around our area, and I'm going, I thought these are protected, right? But you know.
Want to thank everyone for tuning in, and especially investors in North America, making some time for an Australian story with American imprint. And we'll be queuing you for feedback. Please share your thoughts, and they'll make its way to Richard's team. And the replay will be available at amvestcapital.com/webinars in about an hour. And please share that, post that if you want. And with that, I guess, can you summarize why we should buy the stock now? You got a lot of news coming out, and then we'll close.
Can you tell me of a better stock to own?
Certainly undervalued. So.
You got to bet each way. You got to bet on gold. Yeah. And I really don't. I think gold's here for the long term, unless you favour Bitcoin. These central bankers are going to play with currency forever now. They've got to fix the mess that we're in. So gold's got a place in the future going forward, I think, for sure. And copper, well, I've been long copper for 10 years, long next year. And I've been wrong for 10 years, but it's finally here. And now, we always said the copper story is coming, the copper story is coming, the copper story is here. It's on our doorstep. Don't worry about today's price. We're about 5 years from today when we hit production peak. This thing will be printing cash. So it's, you know, it's a fantastic story.
Great. Thanks, everyone. Thanks, Richard and your team. And we'll have you on again.
Thank you very much. Appreciate it.
Bye. Good day.
Thank you.